This is CG, and I'm speaking to you from my home. And all or most Pinnacle employees are working from home, and we are nimble and able to take care of you. But I wanted to talk about the whole mortgage business as it is today, and that we've seen some big jumps and negative occurrences. Friday, we saw all the non-QM investors pull back, pull out, refuse to fund loans that were docs out. Refused to honor rate locks or commitments that they had made because a bank statement loan may be a more risky endeavor than a full doc, fully qualified loan. But who knows who is going to survive in terms of an employee or a self-employed borrower. Um, then we saw the jumbo investors, all the hedge funds and investment corporations pull back on jumbo. So leaving us with government loans are Fannie and Freddie are still purchasing, but Ginnie looks rather weak. The mortgage servicers, the Lakeview, Two Harbors, PennyMac, Pangora, they're essentially the middleman in the market that is a liaison that protects the lender who owns the note, doesn't protect the borrower whatsoever. So as they're worried that unemployment's going to skyrocket, there won't be jobs, there won't be income to be able to pay payments, we're going to see lots of defaults and foreclosures in the coming future. So they're all very shaky and not agreeing to purchase the lower end deals. So lower FICO score, high debt to income ratio, even though you may have approval, may not be a saleable loan. So you need to look at those very carefully and find a workaround to pay off a debt to get the ratio down. FICO, we won't have time probably to fix that because it takes time to be able to repair a score. The REITs also another middleman in the mix. Annaly, American Capital Group, MFA, Hatteras, and Capstead are all pulling back on purchasing, and they also do servicing. So it's going to be the banks holding the deals that they've done in the last 2 weeks and waiting to see if maybe in December the market comes back and we'll be able to sell off product that is at lower prices. All these companies are at risk because they have value as rates increase, but when rates decrease, you're going to see all those stock prices and bank prices go down. Nation Star and Aquin, the two biggest servicers, um, also buy mortgages and service them. So the topic I did want to mention is I have in my house many of these. I think I have 4 of these VPNs, and we don't work with a VPN, but banks used to. Before the crash of 2008, everybody had a VPN so that you could access your loan files from a remote location, and it constantly is setting up new codes to enter into the system. But they were considered not secure, I guess, or old, old, uh, old information, let's call it that you could hack them. And so banks cannot allow employees who work in a big call center to access their files from home like I can. Um, Same with uh, some of these big online entities uh, are saying that they're not going to lock loans until it's clear to close, meaning that a borrower who typically locked a loan on the day that they wanted to lock at the lower rate for the time period that they wanted to lock will not be able to do that until after they're actually totally ready to draw docs. Quicken pretty much has said that, and the reason being they have a center where employees sit immediately 1 or 2 feet across from each other and share headsets, which is not going to be a viable way to go forward operating a mortgage operation. They're going to have to find some other way to allow employees to work from home, and that's going to take some time to shake out and figure it out. Meanwhile, being nimble is everything, and I'm here to help you. I'm here to answer your questions. If you have a deal that you feel is staggering or faltering, uh, it's fine to double app and go out and find the solution for your client. My phone number is 949-784-9699, NMLS 324982. And forgive my home environment, which is actually a working ranch. And so you did hear chickens and woodpeckers and cows.